This conference will now be recorded.
Okay, today let's talk about something related to asset accounting, which is very important from your interview point of view. Okay, this is very important topic for every interview, in every project, in every organization. If you are if you are good at this asset accounting, you can mention in your project that you were completely working on asset accounting only in your assignments. Let it be your implementation or rollout or support, you can tell you were majorly involved in asset accounting related areas. This is one of the big module in FI, and which is a little tricky, complicated, but not difficult. It's just tricky and complicated. If you understand the basic logics properly, this is very easy. If you are not good at the basic logics, you will find it very tricky, very complicated. Okay, many people will find this difficult because they are not focusing on the actual basic fundamentals that you have to know about fixed assets before you start working on asset accounting on SAP FICO. So normally when we talk about asset accounting, here this is all about your fixed assets. Okay, if you're talking about asset accounting, we have to be very clear this is related to fixed assets. Now, when you talk about fixed asset, this will give you benefit for more than 1 year. Correct? Fixed asset will give you benefit for more than 1 year. If any asset which is giving benefit for less than a year, we call it as current asset. Am I correct? Yes. If you have any asset which is giving you benefit for less than a year, you call it as a current asset. Any asset which is giving you benefit for more than a year, you will call it as a fixed asset. Now, this fixed asset is called as asset accounting in SAP FICO. For this fixed asset, you also call it as localization or country specific requirement. Okay, in your interviews, people might ask you, do you have any experience on localization or country specific requirements? Your fixed asset or asset accounting is one of your localization or country specific requirement. Fixed assets are different. Fixed assets are different in terms of accounting treatment from each country or from country to country. In every country, there will be a different treatment for fixed assets. That is the reason we call it as localization or country specific requirement. Clear? Now, for any fixed asset, you have something called accounting law or accounting rules. You have to follow the accounting law or accounting rules to compute your fixed asset calculations in any organization. Now, these accounting rules or accounting laws are country specific. If you are in India, you have to follow your fixed asset accounting or calculations according to Indian Companies Act. If you are in some other country, you have to follow your fixed assets according to that respective country's accounting policies. Now, these accounting laws or accounting rules, we call it as accounting principles in SAP. Accounting principles, we call it in SAP. Now, this accounting principle decides how you are evaluating your fixed assets in SAP FICO, especially in S4HANA. You have two environments in SAP. One is your ECC, other one is S4HANA. Right, when you talk about fixed assets, you have two elements here. One is baseline configuration. I'll put this here. I'll move this a little right side. Baseline configuration in ECC is different. Baseline configuration in S4HANA is different. There are slight differences between the initial setup or baseline configuration for your fixed assets from ECC to S4HANA. Next one, you will have business process. Business process, it is the same. It is the same everywhere. But when it comes to your baseline configuration, this is different This is different. There are slight differences between your ECC and S4HANA when it comes to baseline configuration or initial org structure of your asset accounting. So we have to first understand what is this baseline configuration with respect to ECC and S4HANA. What are the changes? And in your interview, people are going to ask you what are the changes from ECC to S4HANA with respect to asset accounting. First of all, we have to understand what is asset accounting in general before we get into SAP asset accounting. After that, we have to see how this asset accounting is configured in ECC, how this asset accounting is configured in S4HANA, right? And the configuration that you are going to do on ECC and on S4HANA in SAP must be exactly the same how it is used in a real environment, right? It is not about you are defining the configuration steps, you are creating an asset, you are posting an asset, you are retiring an asset, you are running the depreciation. This is not called as practical asset accounting, right? When you talk about practical asset accounting, you must be in a position to take a physical asset and how a physical asset is created until it is retired. The complete life cycle of an asset or the complete flow of an asset you have to understand from an organization point of view or from a company point of view. How they are going to create an asset, how they are going to evaluate this asset, and how this valuation of the fixed assets is created in SAP. For every asset accounting that any organization does, they will have manual calculation, they will also have SAP calculation, and they are going to verify whatever the numbers your SAP is giving, whatever the number that their manual calculations are coming, they are going to map or verify this. Wherever they find any difference, wherever they find any mismatch, they are going to put a query to you asking or requesting you to explain why there is a difference. For these kind of queries, in short, for any kind of issues, for any kind of queries on asset accounting, your basic accounting knowledge is a must. If you are not good at basic accounting, it is difficult for us to understand asset accounting practically from an organization or from a real-time perspective. It is easy to configure asset accounting only from the configuration point of view. But if the intention is to learn the asset accounting from a practical point of view, wherein you are in a position to configure asset accounting for a project, for an organization, or if you are working in any existing organization or you are assigned in any existing project, you will be able to pick up the issues or you will be able to understand how they are using their asset accounting. If that is the requirement, right from the beginning, the way you understand the asset accounting should be different, right? Otherwise, you will find huge difference between your asset accounting that you configured while learning, while practicing. The same asset accounting that is in an organization is there is no comparison except the T code. You will find nothing similar, right? You have to start from the scratch exactly the way it is used in a real environment. Only then you will be able to manage asset accounting in any project. Otherwise, it will be difficult to understand the problem first. Forget about giving a solution. First thing, we have to be in a position to understand what your user is talking, what your client is talking about, and whether whatever we are talking from the asset accounting point of view is our client able to understand or not. It has to be two-way communication. Whatever your client is talking about asset accounting, make sure you are able to understand. Whatever you are talking about asset accounting, make sure your client is able to understand. The common language between us is only the accounting, right? If there is no accounting in between, it is difficult for a consultant to communicate with a user. So do not ignore this accounting, right? Now keep in your mind this point. This point you have to keep in your mind so that when we do this asset accounting, you will have a clear understanding, clear clarity that baseline configuration setup in ECC is different, baseline configuration setup in S4 HANA is different, but business process in ECC, business process in S4 HANA are the same. It is not going to make any difference when I'm when I'm using fixed assets in my organization. it is not going to create any difference for me practically whether I am using SAP ECC or SAP S4HANA or Oracle or any other accounting application. End of the day, I am supposed to prepare my financials. What is my fixed asset value I am showing on my financials? What is the depreciation I am showing on my financials? What is the profit on sale of asset, net book value of the asset? Every calculation is manually prepared. The same numbers you are supposed to bring on your accounting application. Let it be SAP or any other application. Right? So do not think that when you are in SAP, asset accounting is different. End of the day, this is accounting. Accounting is a standard, common, irrespective of your accounting application. So your source, your base should always be the accounting. Take this basic accounting and step into SAP for easier understanding. Okay. Now, in general, let's say when we talk about assets, we are talking about fixed assets. Let me put fixed assets. Now, if you talk about fixed assets, we are going to put this fixed assets under balance sheet. Correct? Fixed assets is a balance sheet item. Inside the balance sheet, you are going to have liabilities and assets. This balance sheet assets is where you are going to show the fixed assets and how your fixed assets are represented in your balance sheet. Please be on mute if you are not talking. Okay, in the balance sheet, how you are going to represent your liabilities and assets, where we are going to represent our fixed assets. Let's say this is your balance sheet. In your balance sheet, you are going to have liabilities amount, you are going to have assets amount. So liabilities, I'm not writing anything because asset is not part of liability. Under the assets, you are going to have a heading called fixed assets. Under the balance sheet assets, you are going to have a heading called fixed assets. This fixed assets you are going to show as gross block. You will represent your fixed asset with gross block. Let's say some amount will be represented. From this fixed asset, you are going to reduce, let's say less accumulated depreciation. From your fixed asset gross block, you are going to reduce accumulated depreciation. After reducing accumulated depreciation from your fixed assets, you are going to get fixed asset net block. For example, if I take gross block as some 1 lakh and if I take the accumulated depreciation as some 30,000, my fixed asset net block will be 70,000, which means current value of my fixed asset is 70,000. You must have heard something called net book value of an asset. This net book value of an asset is called as fixed asset net block in your balance sheet of any organization. So this is how your fixed assets are represented in your financials, especially in your balance sheet. Once you understand how your fixed assets are represented in your balance sheet, you have to understand how these numbers are coming into balance sheet. Okay, we know that this is an asset. We are talking about fixed asset. Fixed asset is a balance sheet item. Under balance sheet, it will be shown as asset. Under asset, you will have a dedicated schedule or dedicated column called fixed asset. But how numbers are flowing into fixed assets? Every company will have thousands of assets. All right, you are going to have thousands of assets. For a simple example, if you want to take, let's say company ABC Private Limited. ABC Private Limited operating in India. Assuming this company has got around 8,000 employees, possible or not possible? Can a company have 8,000 employees?
Yes, possible, sir.
Right? Assuming a company has got 8,000 employees. Now each employee will have to work on system. Right? You'll have to give one system, either a laptop or a desktop, to each employee to do their daily work. Assuming you have got 8,000 systems. Now you are going to have 8,000 computers or laptops. Possible? If I have 8,000 staff, 8,000 employees, I have to submit or I have to provide laptop or desktop for each of the employee to do their work. Is this correct? Valid?
Yes.
Now every employee who is going to use a laptop or a desktop, from a company point of view, it's an asset, because no company will change the laptop within 6 months, within 1 year, right? This laptop will be used for minimum 3-4 years, right? They are going to use the asset for more than a year, which means this is a fixed asset. Now, when you are using an asset for more than a year, you call it as a fixed asset. These assets which are going to give you benefit for more than a year are called as fixed assets. For these fixed assets, you are going to have a dedicated subledger called asset accounting. Okay, now if I put asset accounting is a subledger accounting. Asset accounting is what? This is subledger accounting. Any subledger accounting will have to get connected with main ledger. Now, subledger will be connected to main ledger via reconciliation account. Okay, any subledger will have to be connected to main ledger via reconciliation account. Why we have to connect via reconciliation account? Because on your balance sheet, you are not going to write 8,000 laptops here. Are we supposed to write 8,000 laptop model numbers here? No, you are not going to write 8,000 laptop model numbers. Instead, you are going to write only computers or laptops. You are going to mention the value of this 8,000 laptops in a single line in your balance sheet. If you want to know what is this breakup of my computer balance, you'll have to go to the subledger accounting, pull out the asset class reporting, wherein you will be able to see each line for 8,000 assets. Which asset is purchased by, which asset is purchased on what date, from which supplier we purchased, which employee is currently using this asset, what value we purchased it for, what is the current net book value of it. All this kind of information at each asset level you have to value it. Okay, for you to do this fixed asset valuation, you must create separate master record for every asset. For example, assuming you have 8,000 employees, you have 8,000 computers. Not every computer is bought on same date. Not every computer is of same brand. Not every computer is of same price. Not every employee using the asset in the same way. If an employee uses the asset may give life only for 2 years. Another employee may be using it very rarely, but this laptop may be working for 3-4 years. So life of an asset is uncertain. You do not know when this will stop working, right? You may have to repair the laptop or you may have to replace the laptop. So there are different things which are involved within this fixed asset, because this is a monetary related item. Anything which is related monetarily will have a financial impact. As a FICO consultant, you have to capture that financial impact. How this financial impact is accounted in SAP FICO. Okay, this financial impact is called as a business process. Your client is going to tell, this is how we are going to use our fixed asset accounting, and you have to understand their existing business process and map it with SAP asset accounting, either in ECC or S4 HANA, depending on the environment in which you are working. But it is very difficult for anybody to understand asset accounting directly in SAP without knowing the basic points how this is used in any organization. right? So you will have asset accounting as a subledger. Any subledger will be connected to main ledger via reconciliation account. In short, when you created any accounts payable, any accounts receivable GL account, on the control data tab of your GL master record, you will be opening a drop down where it will give you customer, vendor. There will be one thing called asset. Okay, there will be one more thing called asset. You will have to select asset for all your asset accounting related subledger accounts. So this is exactly the same if you understand how your accounts payable, accounts receivable is designed. In the similar way, you are going to design your asset accounting. In your accounts payable, in your accounts receivable, you are going to classify vendors, customers based on the nature. If I'm talking about vendor, I may tell domestic vendor, import vendor, one-time vendor, employee vendor, third-party vendor, intercompany vendor. Correct? I am segregating based on the nature of transactions that I am going to do with vendors. I am classifying accordingly. I am calling this as vendor account groups. Similar to vendor account groups on the asset accounting, you are going to have something called asset class. Right? The way I segregated domestic vendor, foreign vendor, third party vendor, one time vendor, employee vendor. Similarly, on the fixed assets, I am going to classify my assets as computers, softwares, motor vehicles, land and building, plant and machinery, furniture and fittings. Likewise, I am classifying it. Right? It is exactly the same how you are going to design your accounts payable or accounts receivable. In the similar way, you are going to design your asset accounting. So you have to start connecting the dots and then understand the remaining part. If you are good at basic version of your APAR, you have to understand from your APAR knowledge how your asset accounting is going to be designed. It is not that every topic that you are looking at it, you are going to look at it from the scratch from zero onwards, because you are already aware of how the system has to be set up, how your org structure will have to be set up. Try and check if your accounts payable knowledge, if your accounts receivable knowledge, you are able to utilize for asset accounting understanding or not. First of all, are we trying to check or compare if my APAR knowledge is going to help me to understand asset accounting? If you're not connecting points like this, it will be difficult, because tomorrow when you're working in SAP, everything is interconnected. If you want to purchase an asset, you want vendor. If you want to sell an asset, you want a customer. So your asset accounting is connected to accounts payable. Your asset accounting is also connected to accounts receivable. Right? Don't see AP is different, AR is different, asset accounting is different. Do not prepare like this for your interviews. Right? Because you have to see this as a business process. When you see this as business process, you are not going to put any headings or side headings in your mind. Don't put headings or side headings in your mind. Only put the SAP process. Put a single heading called business process. And if this is my business process, if this is my business requirement, what you are going to do, only that I want. As an interviewer or as a client, as a user, I do not want whether this is part of accounts payable, accounts receivable. If you are talking about these headings or side headings, nobody will select you. Okay, first thing that you'll have to remove is eliminate this headings, side headings from your mind. Don't connect this belongs to AP, this belongs to AR, because end of the day you are supposed to meet the business requirement. You have to execute a business process cycle on the system. For this, whether you do it in AP, AR, I don't care. If I am the business, if I am the user, I don't mind, I don't care what you are going to do. I'm least bothered about what you're doing on the system. What I want is, I want to purchase an asset, I want to use the asset, I want to sell the asset. Show me this process. Don't tell me this is in AP, this is in AR, this is in accounts, asset accounting and all. Nobody is interested in this kind of explanation, especially in your interview and moreover in your practical job environment. everybody is primarily mainly focused on business process, how you are connecting the points, okay, and how you are explaining the business process, how you are convincing me. Now this subledger is now connected via reconciliation account. After this, let's say a company wants to purchase an asset. Okay, a company wants to purchase an asset. If a company wants to purchase an asset, how they are going to purchase it? Normally, when we talk about asset, we are going to talk about assuming that you want to purchase a laptop. I want to purchase a laptop. Now, if a company gets a requirement that a laptop needs to be purchased, now what they will do, they have to raise a request. So in any organization, they'll have to raise a request. This request is called as CER. So they'll have to raise a CER request, which is called as capital expenditure request. Okay, they have to raise a CER. Which asset they want to purchase, they'll have to raise a capital expenditure request. Now, when we talked about accounts payable, we were talking about something that most of the purchases in any organization will happen through purchase order or without purchase order. Normally, in any organization, purchases will take place with PO or without PO.
With PO, sir.
With POs.
Right? In any organization, purchases will happen with purchase order only. No company will directly go and purchase. If they are purchasing, those are all called petty expenses. Okay, only the petty things will be purchased on the spot, but otherwise, most of your purchases based on the purchase order. Now, if I want to purchase a laptop, what is the ideal process in any organization? Somebody from your company will go to some shop and purchase, or somebody from your company will place an order in Amazon, or somebody from your company will place an order to a retailer, to a supplier. Option number one. Option number one, go to a shop and buy. Option number two, place an order online. Option number three, place an order to a supplier via PO. Which option is followed? 1, 2, 3.
Third
Option
option.
number 3.
Third option.
This option is followed.
Third option.
Right. This option is what followed in any organization. Right. If you are purchasing for your own purpose, you will be going with option number 1, option number 2. But when you're purchasing for an organization, option number 3. So whatever you see from your personal point of view, whatever you see from an organization point of view, you will find differences. So we are not supposed to assume whatever is there in our mind. You have to practically think, if you're in an organization, am I going to send somebody to a shop to buy the laptop, or am I going to log into Amazon and then Amazon Prime, Flipkart, this sale, that sale, and then I'm going to place the order? These things are not going to happen in any organization. So they will place an order to a supplier via a purchase order. When you are creating a purchase order to procure an asset, this is called as asset procurement. You call it as asset purchase or asset procurement. Either you are procuring the asset or you are purchasing the asset from a supplier. Procurement from a vendor or supplier. Okay, when you are procuring the asset from a vendor or a supplier, you need to place an order. So we need to place an order. Which order is this? Purchase order. This is called as purchase order or PO. Correct? You'll have to place an order. This order is called as purchase order or PO. Once this purchase order is created, what is going to happen? What kind of a purchase order is this? Is this a material purchase, or is this a consumable purchase order, or is this a asset purchase order?
Asset purchase order.
Asset purchase order.
This is called as asset PO. You are going to create an asset PO, because when you're talking about purchase order, you have to be again very specific. Is this a normal expense PO, or a material PO, or an asset PO? Now when you're talking about from normal SAP learning point of view, you call everything as a PO, purchase order. But when you're talking from a practical point of view, from an organization point of view, nothing is called as PO. When you're talking about something called purchase order, you have to specify what kind of a purchase order it is. Whether this is your asset purchase order, expense purchase order, or material purchase order. Let's say this is asset purchase order. If you're talking about asset purchase order, do I need asset number in my purchase order or not?
We need the numbers.
If we have to raise an asset PO, should we need asset number in PO or not? Is this required or not in asset in PO? While creating the purchase order, should I mention the PO number or not?
Yes, sir, we need to.
Right? We will have to mention the asset number in the purchase order. Otherwise, this PO will be invalid. The person who is going to create the purchase order will have to specify what asset are you going to purchase. I cannot say I am purchasing an asset, please approve the order. Nobody will approve it. You have to specifically mention which asset are you going to purchase. Now the person who is creating the purchase order, is the same person allowed to create the asset master? Yes, no? If I am the one who has to create the purchase order, am I able to create the asset or not?
No, not necessary, sir.
Right? It will never be. Okay. Let's say if Ajay is creating PO, Ajay will not be able to create asset master. Clear? If I am creating a purchase order, I will not be able to create an asset master. Now somebody else will create an asset master. Now this is somebody else is from your master data team. This is somebody else is from which team? Master data team. Now for master data team to create an asset, there has to be a valid approval. So they need a request. Whenever you know that you are going to purchase an asset, in short, you are going to purchase a laptop. You are going to purchase a laptop. Are you aware of which laptop you are purchasing, or you are going to decide later on? Because now the intention is to create an order with the vendor, place an order with the vendor. When you are going to place an order with the vendor, are we clear about which laptop are we purchasing or not? Yes, no?
Yes, sir. We are clear.
Right? We will be clear what laptop we are going to purchase. Only after having this clear understanding, we are going to place an order with the vendor. We cannot just like that send me a laptop which is best in the market currently, which is having more discount, which is having more RAM. You are not going to tell that way. Instead, you will specifically mention laptop of which brand, which model, what configuration. All this information you are going to specify and place an order. Now similarly, if you are going to purchase laptop, let's say I'll say Dell, maybe Latitude 2500, some dummy number I am giving. Ignore if this is not a valid asset number, just ignore it. Some valid model number we are specifying in the asset. Now you will have to give a capital expenditure request to the master data team, in which you are going to mention about which one you are going to purchase. So you are going to purchase a Dell laptop, and this laptop is purchased for what purpose? If this is purchased for an employee, you will be mentioning that employee. Let's say this laptop is purchased for Mr. Ajay. I'll tell Dell Latitude 1500 laptop for employee Ajay. So while I am creating this asset, I am going to receive this capital expenditure request, which is approved by the business. Like the finance department will approve this purchase. If this is not approved by the finance department, you are not going to create the order. You will not be able to place the order. So once you get this approval, you are going to share that approval along with this capital expenditure request to the master data team. They are going to look at this. They will create the asset master. Let's say master data team will create the asset master, and they will share the asset number. Okay, master data team is going to create the asset master. They will share the asset number. Now once I have the asset number, I am going to create the asset purchase order, because while creating the purchase order for asset, I have to specify the asset number which I am going to procure through this purchase order. For me to specify that, I must require the asset number, which I am going to receive it from the master data team. Once I get this, I will be raising a purchase order. Based on the purchase order, I am going to receive the asset. Once the asset is received, I am going to capitalize the asset. Whenever you are purchasing, you are going to call it as asset capitalization. Okay, you are going to call a term called asset capitalization. Asset capitalization is nothing but asset purchase. Okay, asset capitalization is nothing but asset purchase. Once you purchase the asset, this asset purchase is called as asset capitalization. From the AP point of view, you are going to call it as asset purchase. From the asset accounting point of view, you are going to call it as asset capitalization. Once you capitalize the asset, you are going to have certain information. You are going to have asset purchase date. You are going to have asset supplier who gave you this asset, which means from where you purchased this asset, and asset capitalization date, asset depreciation method, how you are going to depreciate this asset. Next one, life of the asset. Next one, cost center of the asset. For every asset, cost center will be mandatory. Like this information is mandatory, and you should also have depreciation start date. These points are mandatory for you to create an asset and for you to create the asset procurement or asset capitalization. Now what is this information, from where this information is coming, and how this is connected to your SAP FICO? So all these points we have to first slowly try to understand, so that when you're on SAP, you are not going to think about what we are doing on the system. Your mind should have clear understanding what is the requirement, what we are trying to achieve from the system. Your focus when we are on SAP system is not supposed to be on the T code which I am doing, config that I am doing. Instead, your focus is supposed to be on the requirement that we have and how we are meeting this requirement. So when I'm making a setting, you have to understand why I am doing this setting in connection with the requirement that we have written on the Excel sheet. It is not that we are just like that creating the asset configuration is not going to work out. For you to understand the process, let's assume that Dell laptop is purchased from, let's say, Chroma for 48,500 INR. Clear? Assuming you purchased a Dell laptop from Chroma for 48,500 rupees INR. Now, when this happens, what will be the accounting entry which we are going to record in the system? Because for you to capitalize the asset, you need to pass an accounting entry debiting the asset. What accounting entry will be passed when you purchase an asset? So here first you need to have purchase entry. So if you are purchasing the Dell laptop, you are going to debit. Dell laptop will be debit. What will be credit?
GRIR clearing account.
Chroma will be credit. Okay. We are not writing through PO sequence. We are only writing from the accounting in general point of view. You will be debiting the asset which is purchased, and you are going to credit the supplier who gave you the asset. Clear? And when you create the asset accounting, there are two ways, especially when you create a purchase order. It is of two types. Option number one, when you do a GRN, you can pass an accounting entry, or when you do the GRN, you will not be passing the accounting entry. Accounting entry will be passed only during the invoice. So two ways you can do it. Option number one, when I do a GRN, I will be debiting my asset, I'll be crediting GRIR. When I do the invoice, I will be debiting GRIR, I'll be crediting vendor. Option number two, when I do a GRN, no accounting entry will be generated. Okay, when I do a GRN, no accounting entry will be generated. When I do the invoice posting, I'll be recording this entry. I'll debit the laptop, I'll credit the supplier. This is another approach. So you have two approaches to be used when it comes to your fixed asset procurement via purchase order. Assuming this accounting entry is passed for 48,500 on the debit, 48,500 on the credit. Now, when this accounting entry is passed, system is going to update two subledgers. Okay. Now, this is the entry in two subledgers. Am I correct?
Yes, sir.
AP and asset accounting. Is my point correct? This is an accounting entry in two subledgers. When we talk about two subledgers, one point in SAP, for every document, profit center is mandatory. Is this point correct? In SAP, for every document, profit center is mandatory. In short, if there is no profit center filled up in any of your line item of a document, this is an incorrect document. You will not be able to post this entry in SAP. Is my point correct?
Correct, sir.
That I'm trying to record a document, debit credit. My debit is supposed to have a profit center. My credit also should have a profit center. If any of this debit or credit is failed to have or to update the profit center, I'll get an error message stating balancing field profit center not filled up. Okay, this is a common error if you are not filling up the profit center, or if system is not able to derive the profit center. Now, one more point for subledger. Profit center is not applicable to update while posting the entry. Is this point correct? When I'm trying to record any transaction for a subledger, in short, for your vendor, for your customer, for your fixed asset, profit center field is not editable. You will not be able to manually feed profit center code for any of your vendor line, for any of your customer line, for any of your fixed asset line. Is my point correct? Yes, no?
Tell again, sir.
If I want to record any transaction, let's say if I have to show you on SAP, just hold on. Let's say if I try to pass an entry in F-43 for any one vendor, let's say AP10, any one currency. I'm not sure if we have vendor here. Okay, I'll take this vendor. Period is not open. Let me put 4. There seems to be some validations here. KR, just execute. Let me take this document. Okay, and if you look at this document, this is your entry view. On this entry view, profit center, you are able to see for the expense account, which means GL account, posting key 40, or vendor account, posting key 31. Where is your profit center? For the GL account or for the vendor account?
For the GL accounts.
For the GL account, profit center is filled up. For the vendor account, profit center is blank. In short, GL account is your main ledger, vendor account is a sub ledger. Is my point correct? GL is called as main ledger, vendor is called as sub ledger. For main ledger, there is a profit center field. For sub ledger, there is no profit center, it is blank. If I double click on this GL account, you will be able to see the profit center field here. Correct? For GL account, profit center field is available. If I go to the previous line, vendor, this is my vendor line. For this vendor line, do you find profit center field anywhere? Like amount, business place, business area, cash discount, baseline date, payment method. If I go to additional data, do you find profit center anywhere? Did you find profit center field anywhere, even if you want to update?
No, sir.
It is not there because this is a subledger accounting. For subledger accounting, your account assignments like profit center, cost center are not valid in SAP. Okay. Similarly, same thing happens for your customer. Customer is also a subledger accounting. For subledger customer, whenever you put customer code, you will not be able to put profit center. Verify when you post a transaction once again. Okay. Now we are
Sir,
talking about
Ajay sir, I have
yes.
a one question. Sorry to interrupt you. Uh, Sir, when I posting withholding tax entry, so when withholding tax is not reflecting at the time of sublimate, but when we going to make a payment through F-53, is reflecting there. So is there any point we are missing?
When you're talking about withholding tax, your withholding tax has two applicabilities. Option number one, whether your TDS or withholding tax is applicable on invoice or is applicable on payment. When you're recording the invoice transaction, you are going to assign withholding tax. Right? In the master data of your vendor, you are going to assign withholding tax codes.
Yeah, is already assigned.
Right? You will be assigning two withholding tax codes there. You'll have to check invoice, payment, both are assigned or only payment is assigned. Okay, and when you are booking the invoice, if you have only one or two withholding tax types on your vendor master, the moment you put vendor account, business place, section code, when you hit enter, a pop-up message comes. So with two tax codes from the master record, if you want to deduct withholding tax at the time of invoice, you need to keep invoice withholding tax code and delete the payment tax code. If you want to calculate withholding tax at the time of payment, on this pop-up, keep payment withholding tax code, remove the invoice. Based on that, a system will calculate TDS at the time of invoice or at the time of payment. Okay, both are valid scenarios. Ideally, whatever the situation happens first, you'll have to book. If you are booking the invoice first, you have to deduct the TDS at the time of invoice. If you are booking the payment first, in short, your advances or down payments, you'll have to deduct the TDS at the time of payment. Okay. Yeah. Now here, if you see, for customer or vendor, profit center field is not editable or profit center field is not available. So how your system is going to derive the profit center here? Now by default, when you display any document, you will see the document on data entry view. This data entry view talks about the data which is given at the time of posting a transaction. If you see here, this is giving you posting key 31, account number 9 all zeros. It is talking about Dell Inc. Now I have one more mode called general ledger view. Let me click on this. If I click on general ledger mode, is my profit center appearing on both the lines now? On the entry view, profit center is there only one line. But on the general ledger view, do you find profit center on both the lines? Correct? Now, if you see, this is not Dell Inc now. This is not 9 all zeros now. This is your accounts payable GL account. This is your accounts payable GL number. Now on the general ledger view, system is going to simulate the document with main ledger accounts, no sub ledger account. Your vendor account is connected to accounts payable vendor reconciliation account, which is 25 all zeros. Now here system is going to bring the profit center for your sub ledger accounting based on document splitting functionality. Okay, based on document splitting functionality, system is going to bring profit center here. Now similarly, for your asset accounting, same thing is going to happen. Asset accounting is also same thing. Asset is a subledger. For subledger, profit center is not editable field. Field is not available. But whenever you are purchasing an asset, you are going to debit the asset, you are going to credit the vendor. If we go back to the Excel sheet, this is my subledger. This is also subledger. We understood just now, for subledger, your account assignments like cost center, profit center are not available. If there is no profit center, if there is no profit center, our accounting document is not valid in SAP. System is not supposed to record any accounting document if your document is not containing profit center on the debit and on the credit. In this scenario, what system is going to do is it will derive the profit center from master data. So for asset line, profit center is derived from where? From asset master. Clear? When you are creating the asset, you will have to define in the asset master which cost center this asset belongs to and which profit center this asset belongs to. Cost center will contain the profit center in it. If you put cost center, profit center is automatically derived. So while creating the asset master, we will be assigning cost center and profit center in the asset master record. And there is something called AC set configuration will have to be made to derive profit cost center in asset postings. Clear? First point, you'll have to put cost center, profit center on the asset master. Second point, you'll have to do AC set configuration. This AC set is a T code. Okay, you will be questioned on these points, how your profit center, cost center is derived on your asset transactions, because they will be specifically putting you questions like this, or even if they put, you have to mention these points. Debit credit is going to a subledger accounting. For subledger, there will be no profit center. For this scenario, you will have to update cost center, profit center in asset master, and then you have to define AC set config. Based on this prerequisite configurations in SAP, you will be able to pick or derive the profit center for asset postings. Only if you tell logically the connected points, the other person will get convinced. Yes, you worked on asset accounting. Otherwise, it is very difficult for us to convince. They might tell why we have to do AC set, what exactly you will do in AC set. If it is a subledger, how profit center is coming, how master data is flowing to here, what is the connection, are we doing anything for this to happen. So they might put these kind of tricky questions to put us in confusion. To avoid all this, if you tell in one go that this is what is going to happen, you will not have any cross questions. The other person understands, yes, you are good at this subject, you know the logical data flow in SAP, they will be good with you. Even if they put a cross question, based on your understanding, you will be able to answer, at least try to convince. So anything that you are understanding at the beginning will have a huge impact on your mind. So if you are injecting right content into your mind at the beginning, it will stay as it is in your mind. Otherwise, if you talk something, if you do something else on the system, if somebody is talking something else, you are completely confused. Right? We are not supposed to have confusions on certain topics, especially points like this, which are going to have huge weightage on your interviews. Okay, here your profit center is derived based on the master data at asset line item first. From this asset line item, it will be automatically flown or transferred to your vendor line item. So here you need to understand the functionality called document splitting. How system is splitting this document and all, you have to understand, because they might put a question to you on document splitting, how system is splitting this entry to derive the profit center. So make sure you are able to connect a document splitting at these entries level, how profit center is coming, on what basis this is triggered and all. At least some basic understanding we should have. Now once you have all this information, you will be able to post an asset entry like this. Once the asset entry is posted, you call it as asset capitalization completed. Now we talked about asset 48,500.
Sir, is the third line is correct also? Third line, sir. The middle one.
This one?
Fourth, yes, sir. Is it correct? So is it applicable or is not applicable?
Not applicable, correct.
It
Profit
is not
center is
applicable.
not applicable. Any other point to be corrected? Only this point, I guess, not is missed. Okay. Next one, we purchased Dell laptop. What is the value? 48,500. 48,500 Dell laptop purchased. Here your accounting entry finishes, like the asset capitalization finishes, and from here on your asset accounting begins. Okay, this is the starting point of your asset accounting. Starting point of your asset accounting is asset capitalization. Once the asset is capitalized, until the asset is retired, when we say until the asset is retired, until this value 48,500 becomes zero, whatever is going to happen for this asset is treated in your asset accounting. It's a subledger accounting. Similarly, if you take your accounts payable, accounts receivable, if you purchase something from a vendor, is your accounts payable completed? No, right? You need to make the payment. You need to remove that liability. Yes, no? If you purchase for 10,000 rupees from a supplier, is that finished, or you need to make 10,000 payment and make the supplier account zero? What should happen? If you purchase, you have to track that vendor account until this vendor account balance becomes zero. Yes, no?
Yes.
Similarly, if you are selling something to a customer, let's say you sold 5,000 rupees to a customer, is your accounts payable receivable completed? No. It just started. It started from your sale. It will end from your payment, because you need to make the customer account as zero. Until your customer account becomes zero, you'll have to continue your accounts receivable or payable process. You are purchasing, you are making down payment, you are passing credit memos, adjustments, whatsoever. End of the day, your AR is zero. End of the day, your AR is zero, to make sure that there is no outstanding. Similarly, AP should also become zero. On the same line, your asset also should become zero. Until your asset is not becoming zero, your asset accounting is live, it is active. You have to monitor what is happening with your asset, what is the current value. All these points you'll have to understand. On every asset, there is something called depreciation. On every asset, there is something called depreciation. So your depreciation is nothing but reduction in the value of asset due to usage. Because you're using it, the value of your asset will get reduced. Okay, because you're using it, value of your asset will get reduced. One point. Point number two, if you are not using, your asset value will get reduced. Am I correct? The moment you capitalize an asset, your countdown begins. Whether you use, you don't use, your asset value keep on reducing its value month on month. Every month you'll have to charge some amount from your asset to the P&L as depreciation expense. Now, to calculate this depreciation, you have different methods. Depreciation methods. You have different methods. We call it as straight line method. You call it as declining balance method. We call it as useful life method. Okay, what is a straight line method? What is declining balance method? What is useful life method? Slowly we will understand. But initially, these points must be there in your mind before you get into asset accounting. This point, at least some basic terminologies must be sitting in your mind. Clear? What is this depreciation methods? How straight line, declining balance, useful life method is used for calculating your depreciation numbers? We will discuss in the next session. But before that, I want everybody to go through these points, understand at least how we are going to do this asset accounting. Whatever the points we have listed, if you go through one or two times, if you just read through these points, at least 50% will be sitting in your mind. Tomorrow when we talk about this, when we actually take practical scenarios and draft in the Excel sheet, you are going to have clear understanding. Okay, so go through these points. Let me stop this recording.